Good morning, traders. Welcome to another edition of Technical Talk with me, Aaron Hill, one of the market analysts here at FP Markets. Today is Monday, the 11th of October, and time is now 8:45 UK time and 7:45 GMT. As a reminder, US and Canadian banks are closed in observance of Columbus Day, and in Canada, I believe it's Thanksgiving Day. Aside from this, we have a relatively thin economic calendar. Tomorrow we have German ZEW economic sentiment and the US JOLTS job openings to look forward to. And Wednesday, of course, we have US inflation figures. This is the CPI and the FOMC minutes. So where are we in terms of current prices? The dollar index, this is the dollar weighted against 6 international currencies, is pretty much flat for the time being. Both the euro and GBP pairs are on the front foot, largely on the front foot, but the Aussie dollar is currently higher across the board. Some notable gains are the Aussie yen, which is nearly up by 1%. The Aussie against the New Zealand dollar is up by spot 7%, and the Aussie dollar is up by spot 4%. Right, so on to the charts. Euro dollar, just give me a second. Euro dollar. So for those who read my daily market and my weekly technical market insight, you will note I did show some. I did write about some bullish interest being shown from this prime support on the weekly time frame, and that again comes in at 1473, 1583. But I did place a caveat to that, saying that on the daily time frame we have Fibonacci support, and that comes in at 1420, 1522. Now the issue with this is, within this prime support on the weekly time frame, we could see further selling into this area before buyers make a show. And the reason I say this is because of this daily Fibonacci support is actually fixed to the lower side of this weekly area. So as I said, we do expect some form of selling to emerge, to develop within this area before we see sellers emerge. H4 resistance, I did note, that was taken out on Friday, and that is at 1563. And that subsequently offered some support late Friday. Now, noticeable upside objectives on the H4 time frame is the descending channel resistance, and that's taken from the high 1846. Now, this coupled with resistance at 1622 is certainly somewhere to look for. And interestingly, this converges with the H1 time frame's technical structure, and that's made up of a Quasimodo resistance at 1605, the round number 116, and a reasonably tight a moderate Fibonacci cluster, I should say, and that's formed by let me just check, a 1.272% Fibonacci projection at 1596 and a 61.8% Fibonacci retracement at 1597. So these are areas to look for. Currently, though, as you can see, we are reacting from another Fibonacci cluster I did highlight in previous market analysis, and that, as you can see, is made up of a number of Fibonacci ratios. Yes, so on to the Aussie dollar. Well, I did note in the weekly technical market insight, we do have scope to climb higher on the weekly time frame, and that's simply because we're reacting from prime support at 69, 68, 72, 42, and that's also reinforced by the daily time frame showing room to climb to prime resistance at 75.06, 75.74. Now, in light of the bigger picture, I did note that H4 resistance at 73.17 was likely on shaky ground. And as you can see, Aussie dollar bulls have taken this level out. What I do like about this is I believe there is stack supply around this area here, and that's between 73.76 and 73.47. Now, with that being said, if it is genuinely stack supply at, what I mean by that is consumed supply, we could potentially be making our way towards this Quasimodo resistance at 73.94. And as you can see, this is enclosed with a let me just check. So we'll get the 1.272% Fibonacci projection at 73.98 and a 6.8% Fibonacci expansion at 73.86. So do keep an eye on these areas. This area today. Also, do keep an eye out for a possible resistance turn support to form at 73.17. As you can see, we are again attacking on the H1 time frame Quasimodo resistance, and this was also converging. It does converge with a Fibonacci cluster. As you can see, though, buyers are likely to take out this area with everything going on the higher time frames, weekly time frames showing scope to climb, again, as well as on the daily time frame, and obviously just taking out the H4 resistance at 73.17 does not places a huge question mark on this H1 Quasimodo resistance, and this could lead us right to the 74 figure, which converges nicely with this area. It just comes in a touch above this area actually. Okay, on to the dollar yen. Now, as you can see, the dollar has rallied quite considerably in early London, in early trade. We're up spot 5% right now. On the weekly time frame, we are digging out, we are climbing our way into supply at 113.81, 112.22. Now, with that, I did say in previous market analysis, there was a supply at 112.66. 112.07, and I believe, if my memory serves me correct, this is glued to the lower side of the weekly supply. Yes, it is. But what I do like about this is there is a really tight. Let me just expand this chart really quickly. There's a really nice Fibonacci cluster tucked just above this supply zone. Now, with that being the case, and I think we might. Yes, we're testing the underside of that as we speak. So with that being said, I believe there will be stops above this area. This will be stops from traders attempting to fade this supply. Now, the reason people are going to be, traders will be looking to fade this supply is quite simply because of its history. Look, it was formed back in December 2018. We had a number of reactions, in March 2019, April 2019, and again, a large reaction in 2020. I believe this, mid-Feb 2020. So with this history, there would have been sellers attempting to trade from this area. And as you can see, stops will be getting tripped as we write. This is a painful move for a lot of traders, I believe. On top of this, we'll also have breakout buyers. So that those traders that believe that the dollar yen is heading higher, they'll be looking to break out. They'll be looking for breakout bullish scenarios above this area. So they'll be entering market buy orders, and with that you may have strong selling coming in from this Fibonacci cluster attempting to fade into that buy stop momentum. So just be aware of this Fibonacci cluster, which comes in between 113 the figure, and between 113 the figure and 112.85, so a 15 pip range to be looking for at this point. Also, with that in mind, we are seeing the RSI, the relative strength index, forming testing overbought territory, and I believe there is some bearish divergence being seen as we write. So on to the pound dollar. Long term, as I'm sure many of you will remember, if you read the market analysis, we have recently tapped below the supply turn demand on a weekly time frame at 36.29, 34.56, and simultaneously we also pierced below the double top neckline. And the double top comes in at 42.41. Now, should this be the case, we could be making our way to around the double top take profit target around 31-ish, 131-ish. But this all depends on the daily time frame, in my opinion. We are tugging at a daily decision point at 37.36, 36.59. If this area holds up, this will add weight, add confidence to a bearish scenario, potentially playing out on the weekly time frame. Now, with that being said, we are also testing ascending resistance on the daily time frame. H4 time frame. And we are currently on track to form a shooting star pattern. Now, if this area holds up, along with this area holding up, we could be in for a bearish move back to at least support at 35.70. Of course, if we break below this support on the H4 at 35.70, again, this adds credibility to the potential bearish scenario forming on the weekly time frame. Clicking over to the Dixie, the dollar index, as I said, there's no change at all right now as of current trade. I just want to highlight the current support and resistances we have going on. On the RSI, this is the daily time frame. The RSI, we do have two trend line supports converging. One is a trend line resistance zone support, and the other is a traditional trend line. Now, with that, we also have supports coming in at 93.90 to watch out for. This is a previous Quasimodo resistance turn support. And to the upside, below this, we also have a decision point at 92.71, 93.53 to be aware of, as well as a trend line support taken from the low 89.84. To the upside, of course, we have Fibonacci resistance, and that's made up of I believe that's a 1.272% Fibonacci projection at 94.40, and if memory serves me, 38.2% Fibonacci retracement at 94.45. And just above this, we also have resistance to be aware of at 94.65. And this is quite a major resistance, in my opinion, as it was the it formed a large move to the upside in March of 2020, and also produced resistance, considerable resistance in the late September of 2020. That's it from me today, traders. I hope we have a productive session going forward. And yeah, I'll catch you on the next session, which I believe is Friday.